Lard Friese is the CEO of Aegon. And Lard, I'm trying to pour through the 34 pages of your report. Why don't you do me and the viewers a favour and tell us about the highlights and where the areas of concern are, sir?
Yeah, good morning. Good morning, Carolyn and Steve, and thanks for having me back on the show. Today we are pleased to report a solid set of results for the second half of the year, which is finishing actually a very strong year for the group overall. Our operating capital generation came in slightly higher than the increased guidance that we gave in the course of the second half of the year, which is good. Our free cash flow came in slightly higher than what we had set ourselves out for this year. And I would say the capital positions of the companies are in a good place. The commercial results are showing some strong spots, but also some softer spots in some areas. But overall, I would say we're making good progress with the transformation of Aegon. And it was a strong year, 2024.
Yeah, let me, if I may, Lard, focus on a couple of the softer spots and go into a bit more detail. International business saw 15% lower new life sales. This is a China story again, isn't it?
Yeah, it is. I mean, in China, we're seeing a subdued economic environment, obviously, and interest rates have come down quite a bit in the third, specifically in the fourth quarter of the year, which has, of course, made sure that we all repriced our products, and that, of course, has an impact on sales. Now, what is important to note is that in our international businesses, we do see our overall book of business growing. In Brazil, we are growing our overall book of business, for instance, by 17%, and the same goes for the other markets. So while China was weighing with lower sales, there are some good spots in the international business as well.
Lord, just one more question for me on China as well. I've just finished a book looking at domestic China and the consumer, and as you know better than I do, the Chinese are saving at unbelievable rates. 40-odd% of their salaries are going into savings. Why aren't they spending more of that on new life sales?
Well, what we, in China obviously is trying to turn its economy from an export-led economy to more, to trying to push for more consumer demand. That's quite difficult, as we all know, in China. We have two companies in China. One is actually an asset management company, and there we see the benefit of people willing to invest more and save longer. And that business has been doing very well, which shows up in our results under the asset management column, which has been able to attract 14 billion in total for the asset manager in new flows. And also China contributed quite a bit for that. On the life insurance side, as I said, this is really where we have to adapt to a different rate environment. The entire life insurance industry has to. And as a result, compared to other ways to save money, they become slightly less attractive. And that's what you're seeing in the lower life sales.
Lard, this is Carolyn. Good morning to you. I need to talk to you about your U.S. subsidiary, Transamerica. When we last spoke to you, I believe that was mid-November, you were pretty sanguine about the new president, the old/new president coming in. Now he's been in office for roughly a month and really making a lot of headlines on a daily basis, maybe on a minute and hourly basis. What do you see as the biggest impact on your business in the U.S.?
Well, it's quite early days to see what the Trump administration will bring to domestic policy in the U.S. However, I think the expectations are quite high that the Trump administration is really trying to maintain the strong economic growth path that the U.S. economy is on, and that, of course, is conducive to our kind of business. But it's too early days to look at the particular policies coming out for the U.S. economy as President Trump is assembling his team and have them confirmed by the Senate.
I want to talk to you about the UK economy as well, because you've been one of the cornerstone investors for the so-called British Partnership for Growth. Now, we've had more visibility. We've had a little bit more time for the new Labour government to do its work, but it's been very tough. The economic outlook, that looks very, very shaky. Are you disappointed by the overall headlines that are coming out of this government?
Well, let's say the government has a number of plans that they've announced, for instance, a pension review, which we welcome. By the way, indeed, we are one of the big proponents of the Mansion House intentions of the UK government to allow for more allocation of pension money into the UK economy, and specifically also in equities in the UK economy. We think that is good. It provides good diversification for clients. Now, the overall economy in the UK obviously is subdued, and we know that. The good news for our business is that we were able to double our retirement plan business sales this year in the UK, and we're making good progress there, while the advisor platform that we have is still in turnaround, as we have announced at our capital markets teach-in on the UK business in June of last year. But overall, I mean, the economy in the UK is, let's say, still subdued, as we all know, and we are supportive of, let's say, the pension review that the government is aiming to do in phase 1 has now been done, phase 2 they need to do. And of course, we are a proponent of investing more of that pension money into the UK economy.
Lard, talk to us about what reforms you see happening that are going to improve European capital markets, that are going to improve pension sales and unleash growth in Europe rather than just, those other jurisdictions we spoke about as well. Europe needs to get really galvanise and move quickly. Are you seeing it happening?
I think there is a huge opportunity for Europe, quite frankly. It is a trading bloc with 450 million consumers. So provided that Europe uses this moment to have, let's say, a big step up in the integration of Europe, to closing the Capital Markets Union and to finishing that project, which takes way too long, and to, let's say, implement the Draghi report initiatives, which I think would be very helpful for the overall competitiveness in Europe. I think that Europe will have, when it comes out to the other side, has a very strong opportunity in front of it. But it has to really now act, and we all awaiting what our leaders in Europe are going to do.
And just for our viewers who aren't aware, Lard, who's holding it back? I mean, we talked about CMU for the last decade.
Yeah. I think this is a number of countries that really need to step over themselves to make sure that this capital market union in Europe really is being finished and becomes a reality that will all be very conducive to the European Union economy and will increase the competitiveness of Europe. Will help to increase it. Yeah,
maybe a country that may or may not have an election in the next couple of days needs to get on board as well. Lard, lovely to see you, sir. Thank you very much indeed for that. Lard Friese, who is the CEO of Aegon.